Okay, welcome everybody to this evening's AUDJPY webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. Now, getting into that in a moment, just to give you a heads up for tomorrow, we're going to go through a webinar on position trading using the monthly and weekly ranges, or trading ranges. So that will be tomorrow evening at 8 p.m. If you want to join me, just register your interest at the webinar page. For this evening, if we can all read through the disclaimer, that would be great. Any questions to the chat box or the Q&A box? I've got both open. All right. So for those that don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at AUDJPY Securities. And I'm a full-time Forex trader. I've been trading the Forex market for just more than 20 years. Mentioning for 110. If you want to contact me, my email's there on screen, duncan.cooper@acy.com. Through the week, you can connect with me at the website, acy.com, go to the market news tab, or our YouTube channel at the AUDJPY Securities Australia. And if you want to connect with me personally, my Linktree page is there. You can get my links there. When you get access to my MT4 charts I'm using, then contact Nathan Bray's emails on screen. For those in the webinar, I'll just put that in the chat. There we go. All right, so let's get into, first of all, this evening, the news items for the week. So it's a big news item week, and personally, I'm going to be waiting for them to get released, depending on what pairs I'm looking at. So tonight, these times are my time, Queensland time. I'm at forexfactor.com. 11:30 p.m. tonight for the US, we've got core PPI and PPI data. It's going to be volatile, for sure. Depending on how the figures come in, may obviously determine how the Fed looks at the inflation figures coming out and what they're going to be doing in terms of interest rate cuts through the year. So it's going to be volatile at 11:30. I'm not going to take a trade before then. I'll see how things lie afterwards. Tomorrow evening for the pound, we've got CPI year-on-year data, inflation data again. It's going to be volatile for the pound at that point. Then further for the US at 11:30 p.m. on Wednesday, we've got the core CPI month-on-month, CPI month-on-month, CPI year-on-year, more inflation data. Again, if the figures come in a lot different or a lot higher would mean maybe not as many interest rate cuts. If these figures come in tonight and tomorrow lower, that would open up much more the idea of further cuts for the US. So these data releases are going to be very volatile, very important for the week. 10:30 into Thursday morning, Aussie unemployment figures, employment change. 5 p.m. for the pound, GDP month on month. 11:30 for the US, core retail sales and retail sales, and unemployment claims. And then into Friday, last red item for the pound, 5 p.m. retail sales. So certainly the inflationary figures for the US and the UK going to be important for the market. The market will be looking at that data, so be aware what's coming out. So as I said, I won't be trading until past the, if this comes up higher or lower, we may expect then that the CPI data tomorrow could come in higher or lower in the same vein, but that's not a given either. But the market will probably think that in general terms. So maybe after tonight's data, you could maybe think about doing something. But what I'm going to be doing at the moment is just looking at the levels that I'm watching and seeing your price gets to a level that I like after a data release, and then deciding on what I want to do. So I'll take you through the levels I'm watching. So I'm just going to talk about, first of all, the US dollar index. Now I'm just going to go to the weekly charts. And I did say last week that maybe we could have topped out at the start of the year, but we did push a little bit higher. And on this weekly chart here, what I'm noticing is we're pushing up here to an area over here on the left. There's a little area of resistance here, which you'll see on the daily chart, the low of that weekly candle. And we've been a fraction short. But we could be coming up to fill any imbalance on this weekly candle, this big drop down here. So we're getting up to quite extreme heights at the moment as well, as I was discussing last week. We are from this range, high to low, we're at 127 extension of that range. We're just a little bit above the 62 level. And for me personally, if I was trading this as an instrument, to me, this would be too high up. Doesn't say that it can't go higher. Of course, if you bought lower down, of course you want it to move higher and you're just waiting to see where maybe this might top out. On the day chart, we did get a bit of a reversal yesterday. Trend is just holding its trend, higher bottom still to a higher top. So at the moment, we're not seeing a trend change. Just squash this in on my daily. What I'm looking at over here, this line, is this little area that we broke down and below and created an imbalance over here at that time back in 22. So we just had a bit of an inflection point on the chart there. Whether we get a major reaction from that level or not, we'll have to wait and see. At the moment, all I can say is, yes, the trend is still holding, but we are quite overextended on the upward move. So that being said, I'd be cautious about continuing to get long the US dollar at the moment. If we had a bit of a healthy pullback, then maybe that may put the instrument in a better position to then maybe get support to move higher. But it is holding an uptrend, so we now might want to wait for a clear signal if we are topping out at any point through this month, a clear signal. We did get a nice reversal yesterday. Maybe there's a bit of profit taking ahead of the news item today. But I actually thought maybe we'd put in a significant top here, but of course we moved higher last week. All right, so let's get into the euro dollar. Now, at the moment, the trend remaining down. I did think we had put a bottom in, but let's slow down here. Just want to go to my other time frames. We've actually come down to a weekly level of support over here. There is still a bit of an imbalance in here. So this is kind of the inverse look of what I was just discussing on the dollar index, but we've had a bounce yesterday on weekly support. I just want to know where we are within the whole range. Now, trends are down, but we have a 62% level here overlapping with this weekly support. So I was kind of discussing this idea last week that this could be a major range up. This could be all corrective in this phase. And we may see then a move like so. Now, of course, at the moment, the high, all trend, the weekly trends down here at the moment. And I'm just looking to see if this confluence area is going to be a level where the market might get support. Sam is saying, does the 79% level fill imbalance? Well, potentially, yes, this imbalance over here, this 79% level is a great level, lining up with that imbalance. And yes, that could well be a target. So if we do break below this level of weekly support here, then maybe we are targeting down here. But at the moment, all I can say is we're bouncing at the weekly level. So I'm just ascertaining as to whether this weekly level is going to offer any kind of major reaction or not. But yeah, that 79% level down here could be a very attractive level for the market to keep heading towards if we keep trending down. All right, daily chart. Now, as I said last week, there's a number of imbalances in this downward move, long-term downward move, that may need to be filled at some point. And we've had a nice reversal down here. So if we were just trading a reversal candle, a break of the high would have been the confirmation of maybe, okay, we're getting a reversal. At the moment, though, we can clearly see we still have lower tops and bottoms. And I did discuss, you could be long or short the euro dollar last week, depending on your stance. And I did say, watch this 79% level up here for a possible short if you're on that side of the market. And we've almost moved down to the 127 extension. So if we're still very much going to hold the trend to the downside, I would look for the next rally. Look to the 79% level. In a perfect world, that's where I would look. Being aware of this area of resistance here at 103.34. So a couple of levels I would watch for rally points if you're much more on the short side of the market. As we get into these news items this week, I would look at 103.34, what happens there if we come up, and 103.80. Now, on the long side, if you're wanting to double on the long side, yes, any further support being seen down at 101.98, so pretty much the 10200 level. All right. I'm a little bit on the opposition of the market at the moment and I'm just thinking the market's a little bit overextended. And if we do get some data coming out from the US that is weaker, well, that could be the precursor for a bottom to come in. So we'll have to wait and see. But, you know, if we're just sticking with the trends, look to sell a rally at the moment. And those would be the levels that I would watch for a rally after the news items this week, okay, at the moment. It's worth noting, as I just want to drop down to, you know, a 4-hour chart just to show you had a nice move up and we're having a day up today. We're actually just coming into some 4-hour resistance here for old support form last week before we moved down. So whilst I've got a bigger range there from the day chart, there is a 4-hour range here. So depending on what the market does a little bit later in the day, you know, it may just come back up to this area of old support in the 79% fib there at 102.82. So that's another intraday level to watch today after the news event. That level may not do anything today because once that news comes out later in the day, we could get very volatile and we're not that far away from that level. So the market will probably move more than 30 pips. So it will probably trade above there. That's why I'm using the bigger range. The range of last week down to now the low of this week. All right, Euro Yen. Now the yen pairs have been selling down. Last week I was discussing the fact that they're holding their weekly uptrends. If we look at the weekly chart now, they're getting a little mix because we had a higher top, higher bottom. Now we have a lower top. So we have a higher bottom, lower top kind of scenario. So that puts the dominant trend in a little bit of questionable, you know, trend there. So trends don't always have to agree. They don't always have to be simple. We're starting to see this kind of trend show now on the Euro yen, the pound yen, the Aussie yen, and the New Zealand yen. I may need to correct myself when we get there, but probably the New Zealand yen as well. So, and what we're seeing on the day chart here is that we're down. So as the weekly is mixed, I would now look at the day chart as my dominant trend. And what I can see here is lower top, lower bottom. So what I will be doing at the moment, if I wanted to trade the pair, is look for a rally. And this rally would be in line with maybe a topping out process that's going on with the dollar yen as well. I would look for a rally back up to the 79% level at 163.57. We have old resistance over here, 163.59 if my eyesight can work. What is it? 8? Let me just see. My eyes are playing up. All right, it's 163.89. So I would look up to this area this week to sell a rally. For then a continued move down. If I can get my drawing tool to work. All right. All right, now euro pound, with the pound heavily selling off, that's created a euro pound move up. And I've been discussing the fact that we have been down at considerably strong monthly support. And I've been discussing the fact that it's been very range bound down there. And of course, support's been holding and we're having a breakup. Now, the monthly trend does remain down. That's a lower top to bottom. However, and the weekly trend does remain down. That's a lower top to bottom too. But it's not able to hold down below. I just want to see where my monthly support is. It's not able to hold down below this area. So clearly buyers are coming in at that area. And that weekly range, I would watch up here. We're at 79% point of the weekly range. Day chart starting to show some wicks on these candles. So, if we were to, if you could get a tight entry, if price was wanting to move back below the 79% level there, 83.98. So if we started to fail at 8,400. Still bullish on the 4-hour chart, but we're high up within that range. So I wouldn't want to be a buyer up so high up within that range. But watching 8,400. You could also monitor this range to see if we come very high up to the 79% level of this range. So 84.14. What happens up there at 84.14? You can see how yesterday got very choppy up here. Kept trying to go higher and then lower, then try to go higher again. But ultimately, that area on the chart was very difficult for the buyers to further progress. So coming back up into that zone later, maybe in the day. I think this area up there as well. That may be a difficult area once more today for the buyers. Of course, we're moving up at the moment. We're very high up within the weekly range. So not where you want to be buying. But if you could see your setup to sell in this area up here, could be a very good level. And moving back down to the weekly chart. Let me just get rid of that smaller fib. If the weekly trend remains in play, then you can get a tight short up here and be successful. This is the highest point within the weekly rally, and it may then decline within the fib tool and offer you a very good risk to reward trade, maybe down to retest monthly support in the 127 extension down here. So it's in a very good area. There's weekly resistance over here to the left as well. So it isn't at a potential rally point at the moment. So let's just put a line in there, A400, as I was just discussing that number. Been previous support, so is it going to start to be resistance? Well, worth watching that level. Okay. Pound dollar. Been having a very good decline. This is how I put the fib from the sell side last week. I was actually long from 124 up here. Got stopped out at break even, which didn't excite me too much because I was hoping this was the bottom, but you can see we failed at around the 79% fib level. Get my tool drawn properly. All right, 79% fib there, last week's rally. Now we've come down to the 200 point of the move down. So down here is way overstretched. In its worst scenario, at least we should have some form of rally back up just to give us a corrective rally up for the next leg down if the downtrend is going to remain. All right, so we're down here, we're very overextended. It's worth understanding that we've traded below this monthly low here at 122.99. maybe targeting the next low if the downtrend is going to continue. But we will often trade below a significant monthly level. And then false break and come back up. So I'm more inclined not to be looking for a short down here. More inclined, and this whole range here, see where the 7% level is. It's just a little bit above that monthly level. I'd be more inclined at the moment to wait to see if we do start to put some form of bottoming down here. This overall move from here to here obviously started to happen in this zone. This is where the buyers accumulated their orders before putting in a bottom here to move up to that high. So whilst we've broken that low, this is where that overall move started from. So the market has to be able to break the buyers that's initiated that move from there. So we're definitely in the zone where buyers would want to come in. Not necessarily where I want to get short. If I wanted to get short, I would look this monthly low that we've broken, 122.99, so pretty much 123.00. That would be the level to watch this week. Are the sellers now going to defend that level to then further move down? This area here, that was clear support for a while before we dropped down last week. 124.87, another level. So these two levels can definitely get traded at this week for sure, even the higher level. And we may just want to do a similar thing like we did last week, is rally back up to the 79% level. So that's very close to this area of old support. So I would look to the high area. Personally, if I wanted to get short, I would look to the high area. Just because it offers you the better risk reward for the next move down. But 122.99, so 123.00 was the first level that got broken. Since breaking, we now haven't traded up to there yet, so that would be the level to watch. And personally, even though I'm saying, you know, this 79% level would be a level to watch for the shorts, from my general trading standpoint, if we can't hold below 123, I'd be concerned that we might be dealing with a false break, and the market may want to start to come up to fill these imbalances. The market may look at this whole range for some form of corrective rally back up this way. So really, I think the sellers need to defend 123 if we're wanting to look for a short. If we start getting above 123, whilst yes, 124.87 can most definitely be resistance to continue the downtrend. False break at this low, you know, if we move up this week, let's say we go up all week to this 79% level, and then we finish by the end of the week, what we will actually see on the weekly chart is a reversal candle. Yeah, if we were to close back above this monthly low this week, we'd have a reversal candle back above a monthly low. To me, that would be a bullish sign that we're probably going to go and have a higher correction. All right, I'd be concerned that we may have seen the last of the immediate down move. All right, so those are levels I would watch. At the moment, we are negative for the day once more. So you can see there, even whilst we've had a very good rally, day up, within that 4-hour range, we're just at the 62% level at the moment. So sellers are coming in at the 62 level. This old 4-hour support is becoming resistance. And I think intraday at the moment, what has been happening is last week's low, which we moved below yesterday, had become support here through Asia and the central pivot point, and we're coming back down to test the same level right now. So we're coming down to test the low of Asia, and you know, Will that area remain as support through the day? It might just be coming down. If you're more on the buy side, there's a little imbalance in here. It may just be coming to fill that imbalance here to then pop back up. So 122, we've been holding above that level for most of the day. And of course, as I'm talking, we're not. But if we get over the next few candles, rejections, and a close back above 122, this whole area here with the last week's low central pivot point, 122 here, get the right tool, and this imbalance that's just getting filled. This could be where the low of the day wants to be. All right, so depending on your viewpoint of the market, support could come in there. With quite a strong little surge back above there, late New York, back above the break of last week's low. So whilst we moved below, it didn't want to stay below, wanted to close back above. So watch that area if you're more on the buy side. Of course, as I said before, I'm not going to take a position until we get past the CPI data, because who knows what's going on. It is worth discussing. Yesterday's low came in at 121. So if the CPI data spikes is down to 121 today, and on a 50-minute chart, you start to see that holding today after the news, 121 could be once again support for an intraday rally, okay? Pound yen. So as I was saying on the euro yen, it's the same story. The weekly chart that was up is now showing a higher bottom, lower top. So it's mixed. I would tend now to favor what is happening on the day chart, which is down. Look for an obvious rally, and this area of old resistance could well be new resistance once more in here with the 7% level at 196.50. So that would be my sell area to watch on the pound yen this week for a rally. Down here at 188.07, weekly support. If we were to get down there this week, that could be a support level to trade back up from. Okay, Aussie yen, same commentary. The weekly trend was in an uptrend, but now we have higher bottom. This is maybe forming a lower top here. Couldn't quite get up to all the day chart lows that got formed here. We broke below, got a little bit short. Now, personally, Aussie yen at the moment, I don't necessarily like it. It's rather consolidatory here. Like, which way is it long term? You know, long term, if I had to make a decision at the moment, is it going to break below here? Is it going to break below there? It's very difficult. So trying to come up with a directional bias. I think the daily's down. So if I wanted to trade, I would put my fib on here. The 79% levels at 98.56, and also there's these highs to the left. So I would look to see on an intraday chart what happens up there if price gets into that area. May form some form of little left shoulder, head, right shoulder affair in that area. Sam, you're saying a bear flag? Well, could be consolidation to move higher. I don't know. It's, you know, what we've had is we've obviously had this very large extending move down, and then since then you can see it's consolidating. Day trend turns up, day trend turns down, weekly trend turns up, weekly trend then turns to mixed. So it's consolidating. So, but the day trend there is down at the moment. I would most definitely at 95.51, which is weekly support, And with this fib 127 extension, that could be strong support to maybe just stay within the range. Just wanting to stay within. My drawing tool will work. This area here. Market may just want to stay in this area. Because what we've been seeing on the contrast to the Aussie dollar and the dollar yen, Aussie dollar's been moving down, dollar yen's been moving up. So what you tend to find, if that becomes a long-term play, that the yen crosses, and we're talking about the Aussie yen here, becomes a little bit more range bound because it can't break into a trend one way or the other because of the two other pairs that I'm discussing. Are all, one's trending up, one's trending down. All right, now I was in the market on the Aussie, got stopped out break even. I got long at 62, did see 63, but then couldn't hold my position. And I'm still rather bullish at the bottom here. Here's the monthly low, monthly range. I was discussing this last week. Whilst we just traded just below that low, up here, we traded above this high. False broke and came down to the bottom of this range. So just because that's traded below does not mean that it's not going to false break and then come all the way back up. So support's holding at the moment. Down on the monthly low, which is also a weekly low. Now what it did last week was it did find its resistance against these lows over here on the weekly perspective. But it can't, whilst it closed below there on the weekly, we're back above. So managed to get about a day and a half below there, but of course today we're back above and we're starting to maybe test 6,200. So the key level is this one. Any retest of what was 61.70. Seeing that hold intraday, that could be the best buying level for the year for the Aussie. All right. If we don't get back down there and we start to keep trending up, then 62 could become support in intra-week. We'll have to wait and see. Yes, from a day trend perspective at the moment, it's still down. And yes, we could just rally and then continue down. So depending on what side of the market on, there's the downtrend. You could simply be watching for a 7% rally back into those weekly lows. This high over here at 62.54. I think that's 62.65 is a 79% level. But whenever we're at major lows or major highs, in this case a major low, I'm less likely to sell a rally when we're bouncing off a major low, because I think if we're bouncing off a major low, we're going to reverse. So I don't sell the rallies. Doesn't mean to say that selling the rally won't work, but to me, if that's a false break, there's a high probability we're going to come back up here if support holds. So I much more favor than trying to get long. And today we've done some form of test on the low of today at 61.70. Okay. We came above it on that candle, tested to move higher. So we have seen a little bit of, so it broke above, this candle came down, this candle came down to be support here to move higher. So any movement back to 61.70 today on the news, it wanting to, if it comes below and it wants to get back above, that could be simply the buyers coming in at that level to hold it. Any dip down here could just be the opportunity to get long. All right. And what I was saying about 62 is, of course, here at the moment, yesterday, at the end of yesterday, we hit 62 and came back down. We've, of course, been above 62 again and came back down. So we're just struggling to maintain life above 62 today. But if we start to see that we close above 62 today, I would look at 62 for support intraday the next day. So I may look to reestablish my long at 62, depending on what the market starts to do around 62. Okay, New Zealand yen. So that weekly perspective. Let's put a minor lower top in here. So it is rather consolidatory. Higher bottom, maybe a lower top now on the weekly. And I've got some lines here from the higher time frames. This top 2 months ago came in at this monthly top here. We're getting some form of support maybe at this area, old highs for the monthly chart. So the weekly is like the Aussie and it's a little bit mixed and direction is difficult. I would most definitely look down here at weekly support, 86.71. If we got down there, we've been a little bit shy this week. But you can see where the support's coming in. There's support. So any movement down to 86.71 should most definitely be closely watched. Probably it's not going to get down there now because I think we may have reversed from these lows. But you can see it's very range bound. Personally, on this particular pair, I would look to down here for buying, and I would look to here. So down there, that's at 86.71, and up here is at 90.09, so approximately the 90 level. Other than that, it's a bit messy. It's a bit messy in here. So when it's range bound, see how messy it was in here. Now again, kind of a similar kind of price action. Well, and ultimately, what may be happening here is it is consolidatory, so we're consolidation. We obviously were holding there, then we broke below, so that may now become the top of this period of consolidation. And we may come up here to then break below here, and that could become a resistance to move down. We could break out this consolidation and move up to the top of this consolidation. But there's clear consolidation there at the moment. Ranges aren't that wide either. So sometimes you just have to look at another pair. New Zealand dollar has been a little bit short of this major low down here at 55.12. We've been down to approximately 56.30. So maybe this is the key level to watch for the buyers at the moment. Could spike down there, 55.12, 5500 on this, US PPI, CPI news. So there is the big, just back to weekly, there is the question similar to what I've been discussing on the Aussie. There's the major range at the moment. Are we going to test the bottom, or have we bottomed? And are we coming back up to top of the range long term? So this could be an exceptional buying level at the moment for a long-term move up within that range. Now, whether we're bottoming out or not, the day trend is remaining down in terms of its construction. It's just been up to the 62 level today. And really, from the seller's perspective, if we close back below 56.07 today, then we could well be, 5600 could be resistance intraday to then move down to test that major low. So, but I would say the same commentary is that if we are holding down here, then whilst I've got these levels of resistance drawn in, so I know where they are, if this is a major reversal on this major low, sure, we can potentially bounce off these levels and also further the trend down. But I'd be cautious that we could bounce there and then move up, bounce off that one, then move up. And these are just levels to now negotiate to the upside to come up to test this area. So I'd be much more looking to get to the long side. If we ever by the end of the week, if some of these pairs to the US dollar are showing weekly reversals by the end of the week, we don't know what the end of the week will bring. As I'm still a little bit contrarian because I know the dollar index is overextended, is if we do see we get a weekly reversal to the upside this week, that'll be in the face of on this pair and as well the Aussie dollar pair. Last week we tried to go up and then we traded down, so we had an outside week to the downside. But if we get a reversal this week, that will be in the face of that candle, saying, yeah, that was a strong candle down, but this week we don't care. In the face of that candle last week, we're having a reversal this week. So that could have just been a whole bunch of stops getting tripped down here to get this as low as possible for the buyers to take control. All right, so on a lot of pairs at the moment, I'm just kind of assessing how the week's going to transpire after all the data that's coming out. And if we get a reversal to the upside, then and we can close that reversal by the end of the week, then that may start to build on the idea that maybe we could put a bottom in on some of these pairs. We'll have to wait and see what the data brings. And one pair that's not been quite as strong in terms of its persistent trend, the dollar Canadian did stall. It is stalling up here. This is how I drew it out last week. I said we drop down, draw a fib, and look for the 79% area. So yesterday and today we traded at the 79% level. Today we've almost traded up to that high there at 144.49. I started to paint this in last week. Where we're going to come up to start putting a lower top and retrace down after having that very long-term monthly upward move. All right, so may have missed the opportunity there. It may later in the day when the news comes out. Quite clearly, with all these 4-hour highs to the left over here, that's where we're getting resistance. So I would say last week's low, these highs to the left. So sorry, last week's high, I should say, at 144.49, not low. Up there is very expensive at the moment for the dollar Canadian. So any revisit up there this week, I would look for the opportunity for further failure. Being so high up, let's just get this back to a higher time frame. Here's the monthly chart. Being so high up here on the monthly chart. So this is coming up to where we've obviously put in this double top. And in actual fact, when I'm looking at this and the major moves, this double top here is obviously has been very expensive, and likes the New Zealand dollar position, which is inverse, and the Aussie dollar, which is inverse. We're at very low levels on Aussie dollar, New Zealand dollar. We're at very high levels on the dollar Canadian, and the big movements, forgetting all the swings, there's a high to the low. Right, this came down. It is a lower low just. So we could be coming up now to put in lower top on the big swings. Could stay sideways, or but that is just a low. That is just a lower top. That was actually a lower top just to there. That's just a lower bottom to there. Is this going to now be a slightly lower top to there? And is it just the gradual turn of the trend? All right, so this could be an exceptional high level to get a short position from. Yes, the monthly trend is up at the moment, but as I just paint those highs and lows in, hopefully you get the picture of what could come together long term. All right, so back to the daily. Potentially fading up here at the 70% level may offer you a further opportunity to trade in that zone this week. We'll just have to watch. I would favor the short side up here. Highest point being 144.49 and 144.43. About a 10-pip band up there. All right, dollar franc. So I painted it last week. We've come up to the trend line resistance. And what I'm showing you here is it is a little, on the long-term scale, this is the weekly chart, range bound. Back up to the high areas where the selling keeps occurring. And, if we were to see a weekly reversal here, that would be the opposite of seeing a weekly upward reversal on the other pairs, because this is the inverse relationship to the US dollar. This could be a topping out area. Oh, 91.58. It's worth watching 91.58. If we start to keep failing there, then that could be the failure point for a move down. You see today, whilst we have traded above or back below, structurally it's still an uptrend, but we're most definitely at an area where I don't want to buy. But if I saw a turn up here, it would be a good reason to expect a movement down from. So dollar franc potentially is at extremes at the moment unless we have a breakout. So for our structure here is still up. You can see it's just come down to these tops and potentially holding. So I would need to see this structure here on the 4-hour chart turn to down if I wanted to get short. If you're prepared to be a buyer up here, you've probably missed the best level already because it's just come down here. That's the buyers. That area where we broke above, to pull back to old resistance to be support. You could re-watch that area. It's 91.30 through the day, but that is where potentially support is. It's just come back up to that weekly resistance level. So the range that we've been putting in today, we're just back up to a 79% level here, overlapping with the weekly resistance level. So that could be a good selling level if you're looking to get short. Dollar yen. Now, I did say last week, watch the 158 level because we were struggling to hold above there. And whilst we got above there, you can see it rejected back below. We're not able to break below the 79% level yet. And structurally, we're still kind of higher bottom, higher top, higher bottom. So it is holding its trend just. It's very high up. Not where I'd like to get long, but if you wanted to get long, let's drop this down to the 4-hour chart. Of last week's range is 79% level. So that's last week's low to high. 79% level overlaps with support at 156.74.79 here. Been a bit short on that pullback. That would be the buying level to watch this week if you wanted to be a buyer. And quite clearly, the selling level is where we're just moving back up to. $62 level overlapping with this area of resistance at the 158.07 to 158.11 area. Could spike up to the 79% level, which overlaps with these 4-hour highs to the left at 158.44. But it's very high up there. I don't think I can make myself buy in that area. I don't know, just from the day perspective at the moment, it really hasn't yet broken down to show a top coming in. So personally on this pair, in an ideal world, what I would like to see is a low broken. Now this may be a new low for me. We'll have to wait and see. But what I'd like to see is break of a low, rally for a lower top to form in the day chart. If we started to see a lower top forming like that, the whole market would see that. And then the whole market would go, okay, the day chart trend on the dollar yen is changing. Structure is changing. At the moment, the structure is not changing, but we're very high up. It may want to come into this imbalance at the moment and fill that before it can decide that it wants to top out. But it is very much struggling there because you can see the rejection last week, but structurally it is still holding. So I'm just going to keep watching to see if the structure can change to the down side. Because of this, this range here, once we're up to 79% level, I'm expecting the market to top out and change its trend. So that's not where I want to get long, but it's most definitely where I'm eager to watch to see if the trend can change. All right, we'll just finish now on gold. Gold's an uptrend on the day chart. It is just struggling in an area of resistance from this weekly top over here. So the weekly chart, which is mixed, we have a bit of a double top here, lower top to that top, higher bottom here. So it's, it's getting support on weekly support, 2602. And is it getting resistance at weekly resistance here, 2685? On the day chart perspective, trend is being a nice formation of an uptrend there. Long-term trend we know is up, but consolidating at the moment on the weekly chart. Day trend's up. I would watch for a dip down to potentially the 62.79% zone, and then see if intraday we start to get support. So 26.46 down to 26.32 there. If we've got a much stronger move down because of news, I would watch weekly support here at 26.02. And before we conclude, I didn't go through the S&P 500, so I'll just jump into that. And it's just on an area of support here. This is the weekly chart. So whilst the weekly chart could be said to be down because we've traded below that low, and that could be a lower top up here. Within this range, we're getting support at 79% level and false breaking that low. So the market is definitely going to react to the news tonight, positively or negatively, depending on the numbers. All right, so structurally on the day chart here, it is lower top, lower bottom. Potentially structurally on the weekly chart, it is down as well. And we may actually now be operating within a larger range, in that the highest time frame scale, the monthly, is in an uptrend. See, we've had a big month up on that candle, 1, 2, 3, 4. So potentially 1, 2, 3, 4, 5 months up. The market never goes up without having monthly pullbacks. Doesn't have to change the trend, but after 5 or 6 months going up, it'll want to have a pullback. Like it did here, it went 1, 2, 3, 4, 5 months up. It had 3 months back. So 1, 2, 3, 4, 5 months up. This may want to have 3 months back. Wouldn't change it. We can only change the monthly trend, the long-term trend, if we break that low. So it may just operate within this range to the downside for a while, because the weekly trend has turned potentially down there. All right, so that's the major range to watch. If this starts to move down, people are going, oh, we're in the next major bear market. A bear market can't really come together or even look like the potential of a bear market until we break this low. Because what we may just see on the monthly chart is it's the same on every scale on the time frame on the chart. This is the monthly. This may just pull back to the 62.79% level for a healthy correction, and then continue up. That is not a change of long-term trend. That's just a normal correction within the trend. Like this pullback here. So I'd be more inclined at the moment just to monitor this range that we're trading in. If we break below there, I would look to the monthly range. So at the moment, if we get more rejections down here at 79% level and the weekly low, we come down here once more and hold and want to come back up. This could be the buying level. So 157.79 area. So to once more come back up. We're in a long-term bull market at the moment until we break that monthly low. So I don't care what anybody says in terms of, oh, we're having a few nasty days down. We can have nasty days down. Does not mean that we've changed trend whatsoever until we break that monthly low. We're just having a bit of a correction. Because don't forget, here is the all-time high. So we're never going to move to all-time highs every week, but we're definitely in a bull market. So wait to see what tonight's data brings. If tonight's data is very much saying that interest rate cuts are definitely on the cards, that's going to be positive for the stock market. Okay, so then you want to start to look for structure that tells you where you should be getting in to the upside once more. All right, I'm going to wrap it up there. If you want to join me tomorrow, then just head over to our webinar page. Tomorrow's webinar will be on position trading using the monthly and weekly trading ranges. So if you haven't seen that before, welcome to join us. Just register your interest at the webinar page link at the top, and I look forward to seeing you then. All right. So I'll leave you with that. Just be very careful with the US inflation data coming out at the moment. It is much better just to stand aside, wait for it to get released, and then see what kind of reaction we get up or down, and can you trade at any levels that you like the look of. Okay. All right, leave it at that. Have a good trading day. If I don't see you through the week, have a good trading week, and I look forward to seeing you next time. Thanks, everybody.